It's often said that from disaster comes opportunity, and PayPal stock is down around 25% today, so investors are wondering, is this potentially an opportunity? I'm going to talk about this and more looking at PayPal stock, PYPL. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in PayPal. PYPL is the ticker. So I previously did a video discussing PayPal's business model and why I liked it, as they should benefit from inflation over time. They're effectively a toll on e-commerce and payment transactions. So the more dollars in circulation, more transactions that occur, they should get a cut of that. It's a beautiful business model. But I've also disclosed that personally, I didn't buy the stock as the valuation was only reasonable and not deeply compelling, which is what I prefer to see when I'm looking at potential investments. So what's going on with their fourth quarter 21 results? I'd also recommend checking out that video if you want to have a greater understanding of PayPal's business model. So PayPal stock continues to be in the doghouse over their decelerating results. Revenue was only up 13% year over year in the fourth quarter versus around 31% growth earlier in the year, around first quarter 21. This was in line with management's guidance, but still a disappointment for the street, given that Wall Street was pretty much shocked how much the business had decelerated over a few months' time. Management is quick to point out that a huge percentage of their deceleration, this revenue growth deceleration, was attributable to losing their business with eBay, which I discussed in my last video for more context. As you can see, their revenue ex eBay grew around 22% versus the 13% consolidated revenue. The second half of 2022 should finalize eBay's payments transition, where PayPal won't need to show this adjustment, arguably, in the second half of 2022 and going forward. That's not the only problem, however, as their cross-border transaction volume was also relatively weak, only up about 14% year over year, adjusted for eBay. With Visa posting cross-border volume that's literally multiples of PayPal's growth, it makes me wonder if other payment gateways are potentially taking share from PayPal. In full disclosure, I do own a stake in Visa. Now, for example, management likes to call out how PayPal is still the #1 most accepted digital wallet, but that doesn't reflect the direction of their competitive position. For example, here it is, they're saying, look how much share we have in terms of most accepted digital wallet acceptance among the 1,500 largest online retailers, 76% of which, largest online retailers in North America and Europe, 76% of them accept PayPal. And they're saying, look, we are just so much better than all these other folks. But the reality is the competitive offerings had much, much lower penetration just a few years ago. Most of these players, I'd argue, were much smaller. So it makes me wonder if PayPal's moat is potentially filling in. I mean, whenever you look at a company, you not only want to size up where they are today, but you also want to size up the direction of their competitive positioning, the direction of their value proposition. Is it unrivaled, or is it becoming more rivaled and now just, let's say, arguably a strong position? While management clearly aims to build a global financial super app that includes gifting, transfers, crypto, QR codes, rewards, they need to prove better transaction or better traction internationally. For example, during the fourth quarter 21, their international revenue was actually down 1% year over year, up 11% adjusting for eBay. But management blames this weakness on supply chain shortages, and it doesn't sit well with me, saying that, e-commerce is, taking a little bit of hit because of supply chain shortages. We'll see. This is one of these quarters where I want to see improved execution in the quarters ahead. Management also disclosed that they were shutting down 4.5 million illegitimate accounts. While management describes this as immaterial to our overall base of 426 million customer accounts, it's a little disturbing that over 1% of their customer base was bot farms that potentially took advantage of their sign-up rewards. I mean, this is a data point that makes you go, okay, do they need to check in on management and, say, hey, this is not acceptable. You can't have mistakes like this happen. So it is sort of a question. Or is it a function of trying to move too fast and launch new products, and you're going to have that type of, occasional overstep or misstep. And so that is something that I think investors are contemplating and reflecting on. Okay, so what about their valuation? With the stock falling about 25% today, investors are wondering if this is now reasonable, or if this is now a time to, let's say, back up the truck. Is this, now a compelling valuation, not just reasonable. First, a quick plug, where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Also, if you enjoy videos like this, please make a point of hitting that subscribe, hit that thumbs up button. So despite their recent results, one needs to step back and recognize that PayPal is still a very strong business. They have hundreds of millions of real active users and tens of millions of merchants eager to accept their business. Customer engagement, measured by transactions per account, continues to grow, up 11% year over year, suggesting that their value proposition for customers is not only strong, but arguably improving. As long as customers increasingly use their services, they maintain a strong competitive position with winning merchant transactions. So they will still have a very strong leverage when it comes to the negotiation with, hey, this is the take rate we want to have when you put, our button on your website, because you have access to all these customers, potential customers that are increasingly engaging with our platform, with our digital wallet. They also maintain many virtues of a dream investment. They have significant free cash flow. They have a huge net cash balance sheet, significant billions and billions of dollars on their balance sheet. They have large buybacks in place, which I'd expect they'll probably, step up with the recent share price decline. There are secular growth tailwinds, and there's inflation protection if inflation really gets out of control. So there's a lot here that I love about PayPal as a business model. Once again, the question remains, what's the right valuation? For context, management is guiding to teens growth for 2022, mid-teens, mid to high teens, and around $6 billion in free cash flow. So first, just a quick reality check. The company currently has, even with this 25% haircut, it still has a $155 billion market cap, around $131 per share. That's around 25, 26 times earnings multiple. So it's still not exactly cheap for teens growth. While on its own, a teens growth rate and lots of free cash flow seems attractive, the reality is that in early 2021, management guided to a 20% annual growth rate. So this is a bit of a disappointment, and I think it's appropriate to apply more conservative figures than what management originally penciled out here. And that includes thinking about margins. Given a combination of management's lower growth outlook and arguably an increased competitive environment, I'm also assuming a lower range of long-term margins from, let's say, 17 to 20% versus mid-20s that I previously considered. They're currently at around 16, 17% operating profit margins. I'm also assuming a slower long-term growth rate in line with management's update and a lower range of end multiples 5 years out. Based on this more conservative outlook, I'm still thinking it trades at a reasonable but not crazy compelling valuation. Of course, this is a hypothetical valuation framework and stock prices can go way higher or lower based on execution and sentiment. But you can see how a lot of these dynamics become self-fulfilling, where if you have worse execution and growth rate is lower than what you articulate or advocate, management saying, oh yeah, we think we're going to grow at 20%. No, now we're really penciling out 15%. That does affect what end multiple people will assume. So you do get this sort of double whammy of lower growth and this sort of hit from sentiment where people say, hey, I want a lower multiple as well. And this is part of the reason why you look at arguably deep value investors like Warren Buffett, and he argues, look, he loves looking for growth investments, but he just doesn't want to have to pay for the assumption that they will continue to grow. And so that's the challenge, is he wants to pay a dirt cheap multiple, so that way if they execute and grow, that's just sentiment expansion, that's just multiple expansion, and he wins. Whereas if they don't and they just do mediocre results, he doesn't have that double whammy of valuation multiple contraction as well, and that's arguably something that arguably should hurt the stock. So I'd say part of the share price decline is certainly warranted. I'd personally be more interested in revisiting PayPal closer to around $100 per share, maybe lower. I'm curious, what do you think, and do you have any thoughts on the competitive dynamics? Either something that I've overlooked, or if you feel like I'm nailing it on the head, I'd love to hear your thoughts. Also, what's the next unrivaled company that I should be looking at here? I'm covering a lot of terrain here. I just did a video on Google, now PayPal, and so I'd absolutely love to hear your thoughts. If you enjoyed this video, please make a point of hitting that thumbs up and hit that subscribe button. Thanks so much for tuning in.